certainty in the stock market is very expensive. And one of the least certain places in the stock market has been China internet. And so the time to be greedy was a couple weeks or a couple months ago. And so I do think that you have to be very selective if you're going to be an active stock picker in the Chinese internet space. And I do think for some stocks, we've hit the bottom. Alibaba is my favorite pick. As I mentioned, cloud computing growing 29%, generates $15 billion in free cash flow, purchasing a lot of stock. The company's purchased more stock this year than Amazon has in its history. JD.com, another company that is a top pick. I do believe we have to be selective, but the baby got thrown out with investors panicked, and there was a great opportunity. And I think the time was a couple of weeks or a month ago. But I think, again, you have to be very selective.
Yeah. But I mean, investors panicked for good reason. I mean, the regulators were standing in the way of a number of these companies. Do you think that the regulators are now, what indications do we have that the regulators are now permanently out of the way?
Yeah, well, look, that is a concern, but then there's the price of the stock. So ultimately, I think you've seen some real significant declines, and the valuations have just become way too compelling. So from a regulatory standpoint, what they wanted was less monopolistic behavior, and essentially what we've seen with Alibaba or Meituan or Tencent was just that. But valuations have become way too compelling, and this is why the China Internet ETF, KWEB, has outperformed the Nasdaq by at least significantly actually this year. So this is coming down to valuations, and I think we're approaching potentially the end of the significant regulatory action on some of the big, because the economy, it's not in China's incentive to overly punish some of these guys. They employ millions of people, and so it's not in their incentive.